While everyone is watching the price hit $77, behind the scenes, the US and EU just released a massive action plan that could change the silver market forever, including the possibility of price floors and government stockpiling. Plus, the Comex just made a move that could send silver into a massive pop on Monday morning. If you own silver or you're thinking about buying, you cannot afford to miss today's update. Let's look at the board. Silver is sitting right around $77 an ounce, up about 1.25% today. Gold is also climbing, currently at $4,737. But notice the trend. Silver is outperforming gold today. The gold-silver ratio is coming down, though it is still above 60. For anyone tracking the ratio as a buying strategy, this is the movement we have been waiting for. But here is the scary part. Economists are warning that we are retracing the footsteps of the 1970s. We're looking at a potential inflation spike to 10%, a level we haven't seen since the post-COVID peak. If the dollar enters a hyperinflationary spiral, holding cash is the last place you want to be. When the dollar loses its purchasing power, history shows us that hard assets are the only place to hide. Some analysts are even suggesting that gold and silver investors could see their wealth multiply 10 to 100-fold. That might sound like Lambo talk, but in the scenario where the dollar fails, those holding the metals won't just be getting rich. They will be the only ones with a preserved store of value while everyone else stays poor. This is the breaking news from today. Ambassador Jameson Greer announced a joint US and European Union action plan for critical minerals. Why does this matter for us? Because silver is now officially classified as a critical mineral. They are exploring border-adjusted price floors. Essentially, the government is looking at setting a minimum price for these minerals to protect domestic supply chains. Think about that. The government is basically acknowledging that the price of silver is too strategically important to be left entirely to the whims of the market. We've seen similar talks between the US and Mexico recently, specifically with Treasury Secretary Scott Bessent meeting with the Mexican Secretary of Finance. The fact that the US is meeting with friendly nations to discuss price floors tells you everything you need to know about the perceived value of silver in the halls of power. They realize that without silver, the modern industrial machine stops. There's also talk of stockpiling cooperation. For those who don't know, back in the 1960s, the US government held a strategic silver stockpile of 165 million ounces. That stockpile was part of the Strategic and Critical Materials Stockpiling Act, but it was completely drained by the 70s and early 80s. If the US decides to rebuild that today, it would require double the amount of silver currently registered on the Comex. Think about the math there. If a single entity, the United States government, decides they want to reacquire even half of what they used to hold, they would effectively eat up every single ounce of available silver in the vaults twice over. The sheer demand from the government alone could trigger the biggest supply squeeze in history. When the government starts talking about stockpiling an asset, they aren't doing it because they expect the price to go down. They are doing it because they are terrified of running out. Now let's talk about the Comex. The CME group just slashed the margin required to trade silver by over 21%. They did the same for gold and platinum, but silver got the biggest cut. Why is this bullish? To understand this, you have to understand how the futures market works. When margins are high, it means the exchange is worried about massive, unpredictable swings. They want you to have more skin in the game to cover potential losses. By lowering the margin by 21.4%, they are signaling that they believe the market is stabilizing at these higher levels. It effectively makes it cheaper for traders to get leverage. It encourages more participation and more liquidity. Usually they lower margins when they want to invite more buyers into the room. This is actually the second time the CME group has lowered silver margins this year, dropping them from 18% down to 11% in just a few months. This is a massive green light for the bulls, and we could see a very aggressive reaction when the markets open on Monday. Finally, we have to address the structural deficit. We are now in our 6th straight year of silver shortages. This isn't just a temporary phase or a supply chain hiccup. We have entered a structural deficit regime. mining growth is stalled. Most silver is a byproduct of lead, zinc, and copper mining, meaning you can't just mine more silver simply because the price goes up. You have to mine more of the other metals first. Meanwhile, recycling can't keep up with the massive industrial demand for EVs, solar panels, and high-end electronics. According to experts, the only way to resolve this imbalance is through price. Supply is inelastic. It doesn't grow quickly, and demand is becoming less elastic because industrial users need the silver regardless of the price. If you're building a $50,000 electric vehicle, you aren't going to stop production because the $100 worth of silver in the car now costs $200. You just pay the price. This leaves the market with a single outcome. The structural deficit will persist until the price reaches a level high enough to force demand to stop or to make recycling so profitable that every old piece of silver is melted down. As the Scottsdale Mint recently put it, higher prices aren't just an outcome, they are a requirement. We are seeing a regime shift. What used to be viewed as cyclical tightness is now a permanent fixture of the market. The inventories in London and New York are steadily declining, and there is no return to equilibrium in sight. We are watching a slow-motion squeeze that is finally starting to accelerate. So, what is the bottom line for you and your portfolio? Between government price floors, Comex margin cuts, and a 6-year supply deficit, the stars are aligning for silver in a way we haven't seen in decades. The US and EU are essentially telegraphing their moves. They are worried about supply, they are worried about critical mineral independence, and they are preparing the public for higher prices. I'm personally glad I've been stacking as much as I have over the last few years, and I'm looking at this current $77 level not as a peak, but as a new baseline. We are moving into a world where holding physical silver and gold is going to be much more beneficial than holding a depreciating currency that is being inflated away by 10% or more annually. If you are new to this, don't let the big numbers intimidate you. Whether the price is $30, $50, or $77, the fundamentals remain the same. There is more silver being used than is being pulled out of the ground. That math eventually catches up to the market. We are seeing the results of that math right now. This is a long-term play against a devaluing dollar, and it's about wealth preservation as much as it is about wealth multiplication. But I want to hear from you. Do you think the US will actually start stockpiling silver again? Or is this just talk? And where do you see the price of silver by the end of this month? Are we headed for $100 sooner than anyone expects? Let me know your thoughts in the comments below. If you found this information helpful, please don't forget to like the video and subscribe so you don't miss the next breaking update on the silver and gold markets. Every ounce counts, and every day we get closer to the tipping point. Thanks for watching, stay informed, and I'll see you in the next one.